I think people are kind of torn because if someone sold in March and the market, they may have sold 3 or 4% off the highs and we're just 5% off the highs, they've got a dilemma because the market's only a little bit lower than where they might have sold, but it wouldn't take a lot for the markets to begin to recover. So I do think investors who go into cash really have to start to think about how war, as much as it's a crisis, people focus on the negatives initially, but then they need to start thinking about the opportunity. You know, as March unfolded, the war looked like not to be a short war, but one that was longer, and I think markets have been adjusting to that. We did look at the past 7 major war events, and the stock market adjusts pretty quickly. Within the first 10% of the entire duration of a war, the stock market usually bottoms. I think that's everyone's concern because we've had several inflation shocks now in the last 6 years. And then this is a war shock that's going through, and it's a critical time for the Fed to have credibility and for consumers not to expect higher prices going forward. The second best performing asset is Ethereum, and the third best is Bitcoin. They've both been up on an absolute basis. I think that's what everybody is watching carefully.
Today, Tom Lee has an urgent message for investors. As we watch Bitcoin and crypto prices start to explode higher, and after the Clarity Act was delayed yet again. Bitcoin and Ethereum just survived the biggest shakeout in crypto history, and Tom Lee thinks it could be the turning point of the entire cycle. In October of last year, Bitcoin was flying above $120,000, and Ethereum was holding strong near $5,000. Then, in 24 hours, almost $20 billion in leverage vanished, the largest liquidation event the market has ever seen. Prices plunged, sentiment collapsed, and every headline screamed, the bull market is gone. But the data tells a different story. Both Bitcoin and Ethereum have now stabilized exactly where they should in a healthy bull phase. Bitcoin at its 20-week moving average, Ethereum is regaining its key support zone. Those levels have marked mid-cycle resets in every major rally before this one. Tom Lee calls this the perfect setup: liquidity expanding, the Fed easing, and risk assets prime for recovery. His model still points to Bitcoin between 200 to 250,000 and Ethereum between 10 to 12,000 by year-end. Not because of hype, but because the structure beneath the surface never broke. ETF inflows remain strong, institutions are quietly accumulating, and long-term holders are pulling supply off exchanges. Every metric says the same thing. The foundations of this market are stronger than the fear suggests. Tom Lee breaks down how Bitcoin and Ethereum weathered the liquidation storm, what he sees in the macro data that most traders miss, and why this might be the reset before the run. Because if he's right, the story of Q4 of 2025 isn't about a crash. It's about the two assets leading the next wave of global capital, Bitcoin and Ethereum.
You can see Ethereum went from $8 to $3,900. That's almost a 490 times return. But last year, crypto kind of disappointed. You can see gold did great, the Mag 7 did well, NASDAQ did well, S&P did well, and you can see Bitcoin and Ethereum actually were down for the year. So in some ways, it made many people wonder, is a crypto winter started, or was even last year a crypto winter? Keep in mind that crypto was doing great until October 10th of last year. So Ethereum was up 40% and Bitcoin was up 33%. But then we had the crypto mass liquidation event. $1 trillion of value was wiped out. As many of you know, it was the largest deleveraging event in the history of crypto, even bigger than what happened with FTX. And they estimate over 2 million crypto accounts were wiped out, went to zero. And many market makers and even crypto exchanges had their balance sheets hurt. So the industry, since October 10th, has been limping along. In 2022, November 2022, when FTX collapsed, it took 8 weeks before the market began to show signs of life. So if you asked us this year, it's a larger event, but when would crypto begin to maybe find its bottom? It would be December 10th. Post-October 10th, as you can see, Ethereum fell basically by half, and Bitcoin fell by 36%. So here we are, but if you kind of squint, you can see since the late December, Bitcoin and Ethereum have begun to claw their way back. Okay. Now, think about that. It was the largest liquidation event in the history of the crypto industry. So, crypto treasuries were built to go public and outperform ETFs by buying crypto. And since October 31, only 2 crypto companies bought any crypto in size. MicroStrategy, from December 31 to the end of the year, bought $2.9 billion worth of Bitcoin, which is a lot. And among the Ethereum treasuries, only 1 crypto treasury bought any Ethereum, which was BitMine, which bought $2.4 billion worth of Ethereum. And in fact, 2 Ethereum treasuries actually sold Ethereum. Okay, so if you think about accretion by buying ETH accretively or buying Bitcoin accretively, it's only 2 companies. Now, let's think about other dimensions about Ethereum treasury dominance. One is just the size of the balance sheet, dollar value of Ethereum held. These numbers, of course, are a little stale, but BitMine is around 13 billion, and that is basically 5 times larger than the next largest Ethereum treasury. But the lifeblood of a crypto treasury is trading volume. BitMine trades $1.6 billion a day, and as you know, we publish weekly stats, but routinely, BitMine is a top 50 most traded stock in America, top 50. And as you can see, that's 14 times larger than number 2 in crypto treasury. So if you're looking at what institutions want a really liquid stock that they can buy without disturbing the price. Well, we trade $1.6 billion a day, so they can buy $1 billion in a day. But the next smallest crypto ETH treasury only trades $100 million a day. It would be very hard for them to put $1 billion to work. So again, that's the comparative dominance. And so my takeaway is in 2025, because of October 10th, it has shown who are the dominant crypto treasuries. And it really, in my mind, is 2, MicroStrategy and BitMine. Between the 2 of us, it's 90% of all crypto trading volume for DATs. So the other 78 companies represent 10% of the volume, which is the companies made rapid progress on getting to 5% of Ethereum. So that was our mission statement on June 30th when we launched the Ethereum Treasury, funded by our PIPE investors, 2 of which are here today. And in those ensuing 6-7 months, as you can see, we wanted to get to 6 million ETH tokens. And in 6 months, we're at 4.2 million ETH. So we're 68% of the way to 5%. We originally thought this would take 5 years, but we're 68% of the way there in 7 months.
Ethereum isn't just holding its ground, it's starting to pull ahead. As we approach the end of the first week in April, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2026, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Now, we have cash, $1 billion of cash on the balance sheet. So if we add the cash and said, let's buy Ethereum with the cash, we would have 4.5 million ETH tokens, which means we're 75% of the way to the alchemy of 5%. So we believe, if you believe this trajectory, Bitmine should cross 5% sometime this year, assuming the 7 months continue to hold. And as you can see, we studied the blue chip standard for crypto treasuries, which is MicroStrategy. And as you can see here, we have 13 billion of ETH, including cash, in roughly 7 months. At the same point, MicroStrategy had 3.4 billion of Bitcoin. In fact, we accumulated as much Ethereum as Strategy accumulated, which took them roughly 1,300 days, or 4 years. Okay, so now that we've stacked some ETH, I think you need to think, because many of you might get angry at us, because I've seen it on Twitter, like, Tom, if you got ETH and don't do anything else, you're just gonna stake it, okay? But then I think you're misunderstanding what happens if you have a substantial stake and especially as a validator, in a proof of stake network, in one of the most important blockchains in the world today. I mean, Ethereum, in our view, is going to be the future of finance. So we have 5%. Imagine like someone saying, hey, there's this really tall kid, okay? He's like 7 feet tall, so we're just going to have him clean gutters because he's so tall, Your best return should be like, oh, he should be a basketball player or something, right? Not a roof cleaner. Okay, so that's what I'm saying. You have to imagine if you own 5% of Ethereum, and it's the most important blockchain in the world, and it's going to be the future of finance, and it'll be the settlement layer for almost everything else, I don't know if you'd want us to just be staking ETH, and then that's it. But that's what a lot of people many of you might even think that's what you want. But let me just try to open your imagination to some things that would make sense. And of course, we want to get to 5% of ETH. So I want to focus on this Moonshots. And at the time we wrote this in our first presentation from July, we said we would use up to 5% of the balance sheet to do Moonshots. Now, 5% today is $700 million. So you should realize we've been giving you this idea that we would take 5% of the balance sheet, 700 million, and our balance sheet will grow, but we want to do Moonshots that will strengthen Ethereum's competitive position. So today we announced one of the Moonshots, okay? We have 13 billion of ETH. So imagine proposal 2 didn't pass and we're stuck in the water. We don't buy another dollar of ETH for the rest of the history of the company. But using the staking yield and with some optimization, that would generate 367 to 390 million a year in rewards. We have $1 billion in cash. That would generate another 35 to 40 million. The company will generate $400 to $433 million a year in pre-tax income. That's more than $1 million a day. And that's been achieved in 6 months. I think a company that goes from zero to, in 7 months, to a company that can make $400 million a year, that's quite an achievement.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. And if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.